All right, get ready to dive deep. Today, we're tackling Aegis Logistics Ltd. You've given me a mountain of reports and documents here, all about this big player in India's oil, gas, and chemical logistics.
They're a fascinating company, deeply intertwined with India's growth story.
Absolutely. So we've got our work cut out for us, sifting through all this to uncover the most important insights about Aegis, their performance, their future, the whole nine yards.
I think our listeners will be surprised by some of the things we've found, like their commitment to sustainability. Did you know they planted 3,000 trees in Kutch?
That's impressive. I'm eager to dig into that later. But first, let's zoom out for a minute. Can you give us a quick overview of Aegis Logistics? You know, the basics, when they were founded, what they do, that sort of thing.
Sure. Picture this. It's 1956. Elvis is topping the charts.
And Aegis Logistics is just getting started.
You got it. So they've been around for almost 70 years, navigating the ever-changing world of logistics. Talk about experience.
Wow, 1956. Their 67th annual report must be packed with stories.
It is. One thing that stood out to me was their focus on vertical integration. They haven't just stuck to one part of the logistics puzzle. Over the years, they've strategically expanded to cover the whole value chain, from sourcing and storage to transportation and distribution.
So they're not just middlemen. They're involved in every step of the process.
Exactly. And that kind of control gives them a real edge in an industry as complex as this one.
Okay, so Aegis has history, experience, and a smart strategy. But what about the industry they operate in? What's the current state of play? You mentioned India's growth story, but what are the specific factors driving the potential of this industry?
Think about it, India, a nation of over 1 billion people, rapidly industrializing and urbanizing. All that growth requires massive amounts of energy, oil, gas, chemicals, the essentials. As India's economy continues its upward trajectory, the demand for these resources is only going to skyrocket.
So Aegis is basically riding a tidal wave of demand.
More like navigating a supertanker through a very busy shipping lane. There's enormous potential, but also challenges. This industry is complex, competitive, and affected by those volatile global markets and constantly changing regulations.
Sounds like they need a steady hand on the wheel. Speaking of navigating, Aegis has those three main segments, right? Gas logistics, liquid logistics, and distribution. Let's break down their performance, starting with gas logistics. What kind of revenue numbers are we looking at?
Well, in their last fiscal year, their gas division brought in Rs 6,496.56 crore. Now, that might sound impressive, but it's actually a bit lower than the previous year.
A dip. There must be a reason for that. What caused the decrease?
They made a strategic decision to reduce their gas sourcing volumes. It might seem counterintuitive, but remember their focus on vertical integration. They're shifting their focus to areas where they can add more value and maybe achieve higher margins, like distribution and terminaling.
Oh, on terminaling. You've got to break that down for me.
Yeah.
What exactly does that involve?
Sure. Think of terminaling as the services they provide at a terminal. Basically, a specialized hub where oil, gas, or chemicals are stored, handled, and transferred. It's a crucial link in the supply chain, and Aegis is strategically strengthening their position in that space.
Okay, so they're making a calculated shift towards higher margin activities. Makes sense. But we can't forget about their other segments, liquid logistics and distribution. How do those stack up against the gas division?
Their liquid logistics segment is doing really well. They've seen some impressive growth there, partly due to a smart change in their product mix.
Product mix. Fill me in. What's that all about?
It just means they've been adjusting the types of liquid products they handle, focusing on those with better profit margins, and it seems to be working. Their liquid logistics division is a major contributor to their overall revenue growth.
So one segment dips, the other surges ahead. The ups and downs of business, right? What about the distribution side? How's Aegis doing in getting those products out to the market?
That's where Aegis really shines. They've seen significant volume increases in distribution. It makes sense when you consider the bigger picture as India grows. So does the demand for essential products, reaching every corner of the country. Aegis is making sure those products reach their destinations safely and efficiently.
So they're not just about moving huge quantities, they're handling that crucial last-mile delivery too.
Exactly. And that's where their network and expertise really come into play. They're connecting the dots between producers and consumers, ensuring smooth operations across India.
Okay, so we've got a pretty good grasp on their three main segments, gas, liquids, and distribution. But let's get down to the nitty-gritty profitability. How healthy are their margins?
This is where Aegis's financial strength really shines through. Their operating profit margin jumped by a whopping 49%. That's not just good, it's fantastic. And it's a direct result of those strategic shifts we talked about, focusing on higher margin activities and streamlining their operations.
49%. That's a huge jump. But I know investors look beyond just profit margin. What about other key indicators like EBITDA and PAT, the metrics that reveal a company's true financial health?
Right. You're absolutely right. Those are key metrics. EBITDA, which stands for earnings before interest, taxes, depreciation, and amortization, gives us a snapshot of a company's profitability from its core operations. And Aegis's EBITDA looks very healthy. In fact, their gas division saw a solid increase in EBITDA, even with that slight revenue dip we discussed earlier.
So even though they scaled back on gas sourcing, their overall profitability in that segment is still up.
Exactly. It all goes back to that strategic shift towards those higher margin activities like terminaling. They're essentially doing more with less.
Impressive. But EBITDA is just one piece of the puzzle. What about PAT? That's profit after tax, right? The real money they pocket at the end of the day.
Exactly. PAT is the ultimate measure of a company's profitability, and Aegis is delivering on that front as well. Their focus on controlling costs is evident in their healthy PAT numbers.
So they're making smart choices, keeping expenses in check, and maximizing profits. But sustainable growth isn't just about making money today. It's about investing in the future. What can you tell us about Aegis's expansion plans? Are they content with their current success, or are they gearing up for bigger things?
Aegis definitely isn't resting on their laurels. They've got some ambitious expansion plans in the works, particularly in the area of terminal capacity.
Terminals again. Seems like they're really focusing on that area.
And it makes sense, given their strategic focus on those terminaling services. They recently completed a 50,000 kiloliter expansion of their liquid terminal at Haldia.
Wow, that's a lot of capacity.
Right, and there's more. They've also commissioned a new LPG jetty pipeline. All clear signals that Aegis is preparing for a future where demand for their services is only going to increase.
So they're anticipating that growth and laying the groundwork to handle it.
But expansion requires resources, and a lot of them. What about their financial situation? Can they actually afford to pull off these ambitious plans? That's a great question, and one that any savvy investor would ask. Let's take a closer look at their financial health, starting with their debt levels. So, about those debt levels, debt can be a good thing, you know. It can help a company grow and expand, especially for a company like Aegis that has big plans for the future.
Right, like using a loan to buy a house. You need that debt to get those keys, but you also need to make sure you can handle the payments. So, how's Aegis doing in managing their debt?
Well, the report suggests their debt levels are manageable. And importantly, they're seen as a reliable borrower by those credit rating agencies. In fact, they had their long-term outlook revised to I&D A stable. That's basically a gold star for financial stability.
So, no red flags there. That's a good sign. But debt aside, what about their actual cash flow? Can they generate enough cash to handle those debt payments, cover their daily operations, and do you still have enough left over for those ambitious expansion plans we were talking about?
Cash flow is king, right? And yeah, their cash flow is looking pretty solid too. One of the key things to look at here is what's called the debt service coverage ratio. It sounds complicated, but it basically tells us how easily they can cover those debt payments with the cash they're bringing in.
So I'm guessing a high ratio means they're in a good spot, and a low one means they might be struggling.
Exactly. A high ratio means they're generating plenty of cash to comfortably cover their debt obligations. A low ratio, well, let's just say it can raise some eyebrows. But Aegis, they have a strong ratio, which means they're in a good place. No need to cut corners or make any risky financial moves.
That's reassuring, for sure. Solid financials give a company room to maneuver and make those strategic decisions. Speaking of strategy, let's zoom out again and look at the bigger picture. How about their market share? How big of a player are they in this massive industry?
The million-dollar question. Unfortunately, those documents you gave me, well, they don't actually say what their market share is. No pie chart with a nice, clear Aegis slice.
Okay, no exact numbers, but we're deep diving here. We like a challenge. What clues can we gather from their performance and those expansion plans we discussed?
That's the fun part. Their steady growth, their acquisitions of new terminals, expanding into new markets, it all suggests they're not just keeping up, they're thriving and making some bold moves, which usually points to a company that's confident in their position.
So, reading between the lines, it's safe to say they're a pretty major player.
I'd say so, yes. Based on the size of their operations and their overall ambition, it's pretty safe to assume they hold a significant chunk of the market. They're a force to be reckoned with.
Okay, so they're a force to be reckoned with. But every business has vulnerabilities, right? What are some of the potential challenges or weaknesses that could threaten their success, even with all those positive signs?
That's a great point. And one thing that stands out, looking at everything, is that they rely quite heavily on just a handful of key customers.
Oh, I see. So if one or two of those big clients decided to scale back their business, it could have a real impact.
Exactly. It could create a dent in their revenue. Diversifying their client base would be a smart move just to spread that risk a bit.
Don't put all your eggs in one basket, as they say.
Yeah.
Makes sense. What other potential vulnerabilities should we be aware of? Anything else that stands out?
Well, this industry, it's incredibly competitive, right? There are players from all over, domestic and international, all fighting for their share. Aegis can't afford to just sit back and relax. They've got to stay ahead of the game, keep innovating, and find ways to stand out from the crowd.
It's a constant battle for market share, like a high-stakes game of chess where you've got to be thinking several moves ahead. And while we're on the topic of potential challenges, what about regulations? This industry is heavily regulated, right? How's Aegis handling all those rules and requirements?
Oh, absolutely. The regulatory landscape for this industry in India is constantly changing, and it's definitely not for the faint of heart. Aegis has to juggle a whole mountain of regulations, environmental protection, safety protocols, licensing, oh, the list goes on.
That sounds like a full-time job in itself. But hold on. I remember reading about Aegis's commitment to sustainability. They're not just following the rules. It seems like they're taking that extra step, going above and beyond, right?
You're absolutely right. Remember we mentioned earlier that they planted 3,000 trees in Kutch? That's a perfect example. It wasn't just for show. It shows a real commitment to minimizing their environmental impact.
Right. They're taking action. So besides planting trees, what other eco-friendly initiatives are they implementing? What else caught your eye?
Well, for one, they've implemented what they call a zero spillage policy across all their terminals, which is a pretty big deal in this industry. They're also investing in technology to reduce emissions. Think things like installing special roofs on their tanks to minimize harmful emissions. And they're even making small changes, like switching to more energy-efficient lighting.
So they're walking the walk when it comes to environmental responsibility. But I'm going to play devil's advocate here. Going green can get expensive. Are these initiatives just good PR, or are they also good for their bottom line?
That's the beauty of it. It's a win-win. These days, consumers and investors, they're looking for companies that operate ethically and sustainably. And Aegis's commitment to these principles, well, it gives them a competitive edge. It makes them more attractive to both customers and investors who share those values.
So good for the planet and good for business. Two birds, one stone. But let's circle back to those regulations we talked about before. How are they dealing with all those evolving requirements?
Aegis isn't just sitting back and waiting for the next rule to drop. They're actively engaging with those regulatory bodies, anticipating changes, and often exceeding the minimum requirements.
That's a proactive approach. So what are some examples of them going above and beyond?
Well, take their recent switch to those e-gate passes, for instance. Not only does this reduce paper consumption, which is good for the environment, but it also streamlines their operations and makes them more efficient overall.
So they're taking those regulatory hurdles and turning them into opportunities to improve. Smart. But I'm curious, with all this talk about sustainability and knowing that the energy industry is undergoing a massive transformation, how is Aegis preparing for the future? What about this global shift toward renewable energy sources? The demand for cleaner solutions is only going to grow.
That's the big question, isn't it? It's the billion-dollar question for the entire industry. And Aegis acknowledges this shift in their vision statement. They say they're committed to supporting India's transition towards a more sustainable future, but the specifics of how they plan to get there, those are still a bit unclear.
So they recognize the change, but the exact roadmap is still being drawn.
Exactly. It's a topic that I'm sure they're actively exploring, and their next moves will be really interesting to watch. Will they invest heavily in renewable energy infrastructure? Partner with those innovative startups developing green technologies? It's a defining moment for them, for sure. Their response to this global energy transition is going to be crucial for their long-term success.
It's like they're standing at a crossroads. The path they choose will shape their future.
What do you think, based on what we've learned? What stands out to you the most about Aegis? What's the big takeaway?
For me, it's their adaptability. They've navigated decades of change in the industry, constantly evolving, finding new ways to thrive. They're not just reacting, they're shaping their own destiny, which was impressive. And that kind of agility, it's essential in an industry that's constantly changing.
Agility, foresight, a willingness to embrace change. That's what sets a leader apart. But even the most successful companies face risks, right?
Mhm.
What are some of the potential pitfalls that Aegis needs to be aware of as they move forward? What should they be careful of?
Complacency, for one. It's a trap that's easy to fall into when you've got a strong track record. But the competition is fierce, and the industry never stands still. They can't afford to rest on their laurels. They've got to keep innovating, exploring those new technologies, or risk falling behind. It's a marathon, not a sprint, and the finish line keeps moving. What other potential challenges do you see? What else should they be wary of as they navigate this evolving landscape?
Well, there's the challenge of balancing their existing business model, their expertise in oil, gas, and chemicals, with the increasing demand for cleaner solutions. It's a balancing act, finding that bridge between the old and the new.
That's a tough one. They need to capitalize on what they're already good at while adapting to a world that's demanding cleaner options. It's a challenge, but it's also a huge opportunity.
Exactly. It's a chance to reinvent themselves and become a leader in this new energy economy that's emerging.
So much to think about. We've covered Aegis's financials, their position in the market, those sustainability efforts, and the challenges they face in an industry that's constantly evolving. Before we wrap things up, let's leave our listeners with something to ponder. Considering Aegis's ambition, their commitment to sustainability, and the fact that India's economy is expected to keep growing, what role do you think they could play in shaping the future of green logistics? Not just in India, but globally.
That's a fantastic question. Imagine Aegis leading the charge developing new technologies, setting the standards for eco-friendly practices, and maybe even influencing policy to promote sustainability on a global scale. They have the potential to be real game changers.
It's a pretty exciting thought, isn't it? A reminder that companies like Aegis can be a real force for good in the world.
Absolutely. It shows that business success and environmental responsibility can go hand in hand. It's something to be optimistic about.
It really makes you think. We've uncovered a lot about Aegis Logistics today, their past, their successes, and those challenges ahead.
It's amazing to think about it. A company founded way back in 1956 when India was just starting out as an independent nation, and now they're a major player in shaping India's energy future.
Talk about leaving a mark. But, like we've been discussing, Aegis isn't just coasting on past achievements, are they? They're evolving, adapting, and really embracing sustainability.
And that's what makes this whole deep dive so fascinating. They're not just chasing profits, they're actually trying to make a difference, a positive impact on the world.
Right. It's kind of refreshing to see, actually. It's a reminder that businesses can be a force for good, driving progress, while still respecting the planet.
Couldn't agree more. Which brings us back to that question we posed earlier. What role do you think Aegis could play in shaping the future of green logistics? Not just within India, but on a global scale.
It's a great question, and one worth thinking about. Imagine Aegis really pioneering new technologies, setting those standards for eco-friendly practices, even influencing policy decisions to promote sustainability across those global supply chains.
Now that would be something. They could become a model for other companies, showing that profitability and environmental responsibility can absolutely go hand in hand.
It's a pretty exciting thought, for sure, and it leaves me feeling optimistic about the future, at least for this industry.
Me too. It's a good reminder that even in this complex world of global business, individual companies, they can still make a difference.
So to our listeners out there, we encourage you to keep learning about Aegis Logistics and their journey. What we've done here today is just the tip of the iceberg. There's a whole world of information out there waiting to be uncovered.
And remember, the future isn't set in stone. It's created by the choices we make today. And as we've seen, Aegis is making some pretty bold choices, pushing boundaries and working towards a more sustainable future for all of us.
Well said. Thanks for joining us for this deep dive into Aegis Logistics Ltd. We hope you've enjoyed it and learned a few things along the way.